Hello, guys. Welcome to this technical analysis series where we will be going through the chapters of the LTC Technical Analysis Volume 1 book. So, this is chapter 1. We're going to be looking at introduction, the power of chart patterns, which is an introduction of what you're going to be going through on the next videos. Before we continue, this is our disclaimer. You can pause the video anytime and go through it. So we begin. The power of chart patterns. So what are chart patterns? How do they work? How accurate are they? Can I base my trades simply on chart patterns? How do I validate if the chart pattern I just saw is valid? So these are the questions that we're going to be going through, attempting to answer as we carry on with the next videos, with the entire series. That's what we're going to be doing. Simply put, chart patterns are used to predict the next possible move of the market. We can use them to confirm our directional bias in the Forex market. Typical example, when the dark gray clouds gather, you know that rain might be coming soon, and so is a story with chart patterns. So I used this example of clouds. When you see dark gray clouds gather, you know that rain might be coming soon. It's a sign that you're gonna get rain sooner or later. So it's the same story with patterns. We use them as a sign of what the market might be or might do in the near future. When they form, you pay extra attention as well. I mean, you pay extra attention as you might get a very strong move when the pattern is unfolding. You get different signs depending on where the pattern has formed. The chart pattern can either be a trend reversal or be a trend continuation pattern. So there are two types of patterns. You have trend continuation patterns, you have trend reversal patterns. Look at them just now. Trend reversal pattern usually form when the underlying trend is about to come to an end, as the name says, a reversal. Some will form in an uptrend, signaling that the current bullish momentum is about to come to an end. So I have some examples here that we're going to look at shortly. But first thing that we're going to look at is the trend reversal pattern. In fact, the entire book is going to be talking, I mean, the patterns that we're going to be going through in this book are reversal patterns. Continuation patterns will be in the next book. But on this one, we're talking about reversal patterns. So they usually form when the underlying trend is about to come to an end. So if the market is going up, you might, at the end of the trend, price will normally give you these patterns to confirm that price, I mean, the trend is coming to an end. So I have here an example with this one here. You had a bullish trend here going up. Markets created the first high, created your neckline here, created your second high, and then dropped, broke the neckline, and then dropped all the way down to where the first leg started. So you have price going up as I mentioned here in the book. Some will form in an uptrend, as we saw, signaling that the current bullish momentum is coming to an end and might see price dropping. So as you can see, it's created that pattern as the market was in an uptrend, creating higher highs and higher lows. So it created that you have a low, a high, a low, a high, a low, a high. That's also covered in the trend when we talk about trend. And then when it reaches that previous resistance or that supply zone at the top, created what? Double top, and then dropped after doing that all the way down. So that's a trend reversal pattern showing you that the current bullish momentum is coming to an end, and then there's a new bearish momentum afterwards. Others will form in a downtrend, signaling that the current bearish momentum is about to come to an end. We might see rally in price. So there is another example where the pattern will form in a downtrend. As you can see here, you had this as a support area or demand zone. And as price was going back to retest, it's created a falling wedge. Then we got that break, that retest, and the rally afterwards. So it's another reversal pattern formed when the market was going down, then it went up. This was a sign. This was a sign that this bearish momentum was coming. If you go to a smaller time frame, this would be um, a very big trend. So this was monthly, but it is a trend because it has created a high, a low high, and a low. You can connect a trend line going down. Now that will be um, your trend reversal patterns. However, trend continuation patterns form when the underlying trend has taken a pause, or sometimes when it's making a correction and it's about to continue in the same direction. As the name says, it's a continuation pattern. So some will form in an uptrend, signaling that the current bullish momentum might continue once price breaks the pattern. So if you have an uptrend, like here on USD, you have this, the market is creating high highs and high lows going up. After breaking that bearish trend line, long-term trend that you had there, which might actually have been another pattern, most probably. But also have to confirm if it's reacting to, why did it form? Is it reacting to anything this side? Most probably. Okay, but we are at this side. We have this trend going up, then we have a continuation. This is a flag, bullish flag. See. Then after this, after it breaks, it continues with the previous trend. Okay, there's another one here. After the break, continues with the previous trend. These ones are not for reversal, they are for continuation. Show that the underlying trend will continue. So that is the introduction on our book. It's also going to be looking at your reversal patterns and also looking at supports, things like supports, resistance, your trend lines, your breakouts, and so on. Chart patterns. Okay. Some will form in an uptrend. Okay, we've already looked at this. Others will form in a downtrend, signaling that the current bearish momentum might continue once price break the pattern. Others will form in a downtrend, as mentioned. So we had here on GBP, NZD, there's patterns forming in a downtrend, retesting, and then break, drop, continues with the previous trend, bearish trend. Here's another one, break, continues with the previous trend. Here's another one, breaks, continues with the previous trend. Okay, so those are our continuation patterns. Chart patterns are powerful signs of the next possible move of the market. So we use them to check the next possible move of the market. So this is where we're gonna pause for the introduction. The next video will be on support and resistance.